On Monday, the stock market, and it is not closed yet at the time I'm recording, is down 1.6%, and the feelings are valid. Is the stock market going to crash in 2026? Should I shift all of my investments one way or the other? And is this a moment where the other shoe drops? Your feelings that you have right now are valid, and they are valid in either direction, in the fact that, hey, this is the moment and you should be concerned, and also the other side of this in, hey, this is an opportunity to buy. But the real question is, what exactly should you be doing right now? I have the answer for you. Let's go ahead and break it down. Now, there are a few people in the comments right now, didn't we just go through this just last year, around a year ago? And yeah, you're kind of right. I even went through the archives for this here channel, which is why you want to go ahead and hit subscribe. Go and do that right now. I went through and saw that right around late February, early March, the stock market did fall. And I did a whole video around how you should protect your portfolio and whether or not the stock market was going to crash, only to find out the stock market did rise. And it was up double digits. Now, I cannot sit here with a straight face and tell you that the stock market is also going to rise double digits at the end of 2026. I do not know that. I don't have a crystal ball that works for the stock market. I may or may not have one for sports. I don't have one for that either. But I don't know that. I don't know that to be true. But history says that it does. History does not also predict the future. So at first, talk about why the market is down. Let's first talk about why the market is down, then I'll give you the answer. The first thing is, right now it appears to be tariff related. Now, why is the president threatening a tariff on the European Union? It has to do something with the Nobel Prize, which is quite dumb. That's what the headlines are saying. That's what the articles are saying. He's upset they didn't get the Nobel Prize, which is given out by an organization in Denmark. Denmark owns Greenland. He wants Greenland. He's been wanting Greenland for whatever reason. He says it's national defense for, the last year and some change. Stupid, I know. We all know. In either case, it's costing me money. It's costing you money. None of us like it. So what should you do? Here are a few things. Number one, I've been saying this for more than a calendar year now, at least a calendar year now. You should continue to stack your cash. Okay, in an emergency savings fund or just a savings account in general. There are several reasons why. The first one is costs are rising. Okay, if the market is going to be bumpy like it was, especially the first half of the year, or at least the first quarter and some change, you want to have the money in the stock market to just stay there and ride out the storm. Like, a lot of people remember how the high points were, and I feel like that's how most people remember it. Like, yeah, the stock market was up double digits. Like, yeah, you remember that part, but you don't remember how Liberation Day was. You don't remember how the first few months of the year were. You have to ride out that storm. I still screenshotted a lot of the things I saw on Twitter and Threads, mostly Threads. I call them the same thing. But I saw the screenshots of people. I'm withdrawing everything from our 401k because of all the stuff that happened. Wasn't the best decision looking back on that, right? But the only way you can just be more comfortable by doing that is by having a larger emergency savings and having just more in cash in general. Also, with costs going up, and we know that to be true because of tariffs, even though people disagree with me when I said that, is the fact that, hey, I might need more money on hand to pay for the higher costs across the board. You might need that. I can't necessarily pay for those things with stocks. A, I don't want to. I want to keep those assets growing. And then B, paying taxes and perhaps a penalty and all type of stuff just doesn't make that much sense. So again, build up that cash position. I have been recommending, a year to 18 months might make more sense. So we've also seen more layoffs in the labor market. Just getting back into the workforce has been a lot more difficult to do. And I found that out the hard way. And having more cash, following my own advice, right? I always practice what I preach here, helped me to navigate that time. So I'm telling you from firsthand experience and also doing this, right? That is a tip that can help to save you if these things do come to pass, and they did come to pass, we did actually have tariffs in 2025 and they are still in effect. The question is, will they be even higher moving forward? So that's number one. Number two, this could be what we call the taco trade opportunity. Trump always chickens out. I did not create that term, the interwebs did. Now, what a taco opportunity is, a taco trade opportunity, I guess, however you want to phrase it, you guys get the point, is, and what we saw last year is this. The president comes up with something, says something on the interwebs, announces something, and that thing doesn't happen. Once the announcement occurs, the stock market falls like it did on Monday, or is happening on Monday, the time I'm recording. We'll see when you guys see it, or when non-members see it. The market falls apart, people buy, and then that thing doesn't happen, or is severely delayed, and the gap in between those things is how people make money. We will see whether or not that happens. Only time will tell. For example, the president announced tariffs on Mexico and on China and on Canada many times, delayed it by 90 days, delayed it by 30 days, and then it was a 130 something tariff or whatever it was, and then it was much lower. And all of those changes, every time he announced those things, market fell. And because they didn't come to pass immediately, and they weren't as severe as what people thought, that was one of the reasons why the market was up. And those, you know, those jostling back and forth, that volatility is how people made a lot of money. Now today, as this is happening and the market is falling, is how some people make money. Say, hey, this is an opportunity for me to buy. And if this doesn't happen, maybe it will, maybe it won't, I can buy low and then sell high later in the year. We know that the president did brag to Charles Schwab about doing this. Yes, Charles Schwab is still with us. I didn't know he was a real person, didn't know he was alive.
This is Charles Schwab. It's not just a company, it's actually an individual. And he made $2.5 billion today, and he made $900 million. That's not bad, because, you know, he's in financials.
Yeah, so that was a real event. And it was funny because I didn't know I thought he was, you know, 1800s person. No, that occurred. So that is something that could be true. Now for me, I'm someone who likes the dollar cost average, meaning I invest on a schedule every 2 weeks, right? Every Friday, whatever it's going to be. So I'm taking advantage of doing that if it happens on a Friday. But in either case, you are consistently buying. So it could be one of those things. Another opportunity that you may want to take advantage of is talking to a financial planner. If you're someone who is following the rules, doing the things that you should be doing, you've got a good job, steady income, but you still feel like, hey, I am behind, then I am the financial planner for you. We can have a one-on-one call at buildingbread.com/call Kev so I can help to build a plan to help move you forward. Now, the next thing that you might want to consider is what to move your investments to. This is something that we have been, I would say, maybe ahead of the curve for. I've been talking about international stocks for a while, especially on Instagram. I would argue we've been talking about it here on the channel too. The U.S. stock market was good, but it was not the best market in the world by far. I think South Korea was the outlier at above 60% gains. We had spots in Europe that did quite well. Germany did pretty good, and there are several other spots in the world that did very, very good. Gold continued to do well last year. This is that time where you might want to shift your funds outside of just the S&P 500. There are far too many people that say, hey, I'm just going to buy the S&P and just leave it alone. Oh, no. Not in this environment, not in this context. I say every year has a theme. This could be the theme where you start to shift your portfolio more international than you have in the past. Now, if you decide to book a call with me, and that call is free, we can sit down and see what your portfolio is and how international you may want to consider to be. This might be the time where you want to get an ex-US fund, which means every other country except the US, right? And you can get S&P 500 to compensate for that. So if you want to learn what some of the best international funds and stocks are that you may want to consider adding to your portfolio, you want to check out this video right here.